Hello traders, welcome back to Target Field Trading. Today let's dive into a detailed recap of a trade I took today on the E-mini S&P 500 futures contract, ticker ES. The date today is August 9th, 2023, and this trade offers valuable insights into our approach to the market using volume profile and volume price analysis. So as you can see on this 30-minute ES chart that we have pulled up, we have a weekly volume profile, and that is notated by the gray areas over here. If you're not sure what a volume profile is, that's okay. I'll very quickly explain it for you. Unlike a time chart where volume is shown during a time period, volume profile details the price at which volume was traded. This can tell us tremendous things about price action and where the heavy hitters in the market are loading up on their positions. This horizontal gray bar chart is the volume profile indicator. It is calculated on a weekly time frame, but you can change that to your liking. This tells us at which price were the volumes traded at during the week. The bigger the volume node, like this and like this, the more positions were traded at that level. Once you see the market take off from one of these clusters, it can be up or down, we don't really care. We can take advantage of this knowledge when price returns to this area. Now that we know a little bit about volume profile, you can see at the bottom here there's a massive volume accumulated at this price range. You can see another one here. After those positions were acquired, the price shot up. This tells us two things. Big players in the market are long around this area, and they are literally invested in protecting this level. They have money on the line to defend it. This is great news for us as the little guy. We can take advantage of these levels and ride the wave of the market with very little risk on our side. When price goes away from these levels, we want to watch for a return to these zones. In this case, the price shot up after the volume cluster. That tells us the big players are long and are willing to defend their position when we get back to this level. We can enter trades near these areas with very, very tight stop losses and squeeze out fairly large risk to reward trades. Having a low risk to reward ratio is crucial when starting out trading, but that is a topic for another video. If you want me to make a video on risk-reward ratios or RRRs, let me know in the comments below. Once price goes away from our level and then returns, we will then pay attention to volume price analysis or VPA. This shows us on a micro scale what is happening with the market. How price action and volume behaves is sort of like how a train travels. You can't just stop on a dime when you're hauling thousands and thousands of pounds of cargo. You have to apply the brakes and slowly come to a stop. That is exactly what's happening here. We see that the sell volume is coming down, then the buying pressure steps up very hard right here. This is the first indication that the downward pressure is easing. Then we get less than average volume here, and it continues the downside. Then we have three long wicks here signaling a reversal with buy volume stepping in. When this buying pressure comes in, this is like the brakes of the train. Once the train comes to a slow stop, and it takes some time for it to do so, like here, it took over 15 to 20 minutes. Each one of these candles is 5 minutes. We changed the time. The price is free to go back to the other direction. We can see that with the steady buy volume that is accumulating down here. Once we identify this trade setup, trade management is key. We want to risk as little as possible to make the greatest return. That is obviously easier said than done, but we have some very strategic tools at our disposal to accomplish this. First, we take a look at volume profile to see where to place our stops. You absolutely must have a stop loss in place before entering a trade. Once you place your stop loss, you can see where to place your take profit. Normally, you want to make the best return without running into resistance, so we will look for another volume cluster on the volume profile chart to exit before we meet this opposition. Once we have our stop loss and take profit, we can make sure that it is at least a 1-to-1 risk-reward ratio, or RRR. That means you are risking 1 to make 1, or risking 20 ticks to make 20 ticks. This allows for us to be right 50% of the time and still break even. If you have a risk to reward ratio that is greater than 1, it is even better. then you're risking 1 to make 2 and need to only be right 33% of the time. To better illustrate that, if you risk $100 to make $200 and you win your very first trade, you can then lose your next 2 trades and still be at break even because you won 200, then you lost 100, and then you lost 100. Obviously, we're not counting for commissions or fees, but you get the idea. You can be wrong more than you can be right and still come out profitable, or at least break even. Once you have your trade set up, you can move your stop to break even when the price moves in your favor, but you want to be sure to not suffocate the trade. Give it room to breathe and play out in your favor. And that's exactly what I did here. Today, I saw the price action coming near this zone. Then I switched to volume price analysis, saw that we were stopping and putting on the brakes of the train. When we slowly started to reverse, I came in long right here. So this was the trade that I took today. I saw this large volume accumulation before this uptrend. I saw the price move away from our level. And then it doesn't matter if it's an hour, if it's a day, if it's next day, if it's 2 weeks from now, the price will eventually come back to this level. And then I'm going to be looking at volume price analysis. I saw these breaks being put on right here on this train and this long bottom wick, which confirmed my long position at 44.80. I bought one ES contract at 44.80 and I ended up selling it, I think it was about 15 minutes later for 44.89, which was 37 ticks of profit on ES. Each tick of ES is worth $12.50, so that's a total of $462.50. The beautiful thing about this is that you're basically betting on a market reversal. So as the market has been selling off for this long period of time, you're betting that it's going to start to turn around right here. So basically, when you have your buy position right here, you put your stop loss somewhere very close, because if the market continues to go down, you want to get out right away. But if it turns and goes in your favor, you can ride the wave up and make a lot of profit for a very small risk. So to recap, we need to identify these high probability zones and mark them on our chart. We need to wait for the price to leave these areas and then return to them at some point in the future. And then once the price reaches our zones, we need to apply volume price analysis to the current price action. And then we need to open our trade with an RRR of at least 1-to-1. And if you do that, you can start to be very profitable. So this was just a quick recap video of the trade I took today. Obviously, I did very well, and I was very thankful that it went in my direction. And I just wanted to share with the community so that people can start doing this for themselves. I struggled a really long time with trading, and I think I'm actually hitting a turning point where I'm winning just slightly more than I'm losing. So I think I'm starting to turn it around. I'm actually engaged in 2 prop firm trading combine simulations, and I'm doing well on both of them. I'm also using Analytica Chart 4 and Polarity ATI to trade NQ futures, which is very stressful. But I look forward to making a video on that in the future. But thanks for watching. Happy trading.